We'll discuss market phases. Market generally operates in four phases, right? So these are accumulation phase, then a markup phase, distribution phase, and markdown phase. So let us discuss those phases one by one. So this is a diagram showing those four stages. So this first stage is the accumulation stage. So here in this accumulation stage, what happens normally is the smart money or the big player or the institution or the mutual funds, they start building their positions slowly, right? So they start buying, right? So they cannot buy in one go, right? For example, if let's say one institution want to buy 1 lakh share, so they can't buy in one go, because if they buy in one go, the price may be disturbed and it may shoot up, right? So what they do is they buy slowly. They buy, let's say, out of 1 lakh, they buy 25,000 here, right? Then when the price rises a little, right? So there are various ways in which they buy. But one way is, let's say, they bought 25,000 here. So what they do is they book some profit here. Let's say they sell 10,000 here, right? Then they buy, let's say, 30,000 here, then they sell few here, so that they book a partial profit, right? Likewise, they build their position, right? They build their position during this accumulation phase, right? So in the accumulation phase, the smart money, right, accumulates the stock or the underlying asset, right? So then what happens, this accumulation phase usually triggers the markup phase. In the markup phase, in the accumulation phase, the market consolidates, it's in the range, right? So what happens, this accumulation phase triggers the price to go higher, right? And that fuels the markup phase, right? So what happens is, when the price breaks this range, when the price breaks this range, right? So the what retail traders think, so they think it is a breakout, and they start buying here. They start buying here after the breakout, and a lot of retail investors come in here, and that triggers this markup phase that take the price higher up, right? So this is the extended accumulation phase. Again, some sort of consolidation happens in this phase, but this is in general a markup phase in which the price moves much higher, right? Then after the markup phase, we have a distribution phase where the institution or the smart money starts selling their position slowly, right? Because they have got a huge profit here. They bought at a very low, very less price, right? Here they bought. So here they start selling their position again. They start selling their position without disturbing the price, right? So they sell some here, right? They sell some here, they sell here, they sell here, and that is called a distribution phase, in which the institution or big players or the smart money starts selling their or sparing of their positions, right? So, and this triggers the markdown phase. That means eventually the distribution phase will fuel the markdown phase when the when the price breaks down from here. There is there is some sort of panic happens. The retailers think the market is going to fall, and the price falls. Retailers also start selling. That pushes the price further down, right? So thus, in the markdown phase, the people start selling their positions, squaring of their positions, and thus pushing the prices lower, right? So this is the markdown phase, right? So normally, what happens in the distribution phase, when normally you see the headlines, the TV channel saying the market is at all-time high. The market. So what happens? The retailers or retail small players think the market is high. They starts buying somewhere here, right? And they put their stop loss below somewhere here, right? Right. And also, when the market falls because of the big players, right? So these stop losses get triggers, right? These stop losses get triggers further pushing the price down, right? So there are four stages: accumulation phase, in which the price consolidates, right? So the big players build their position, and this eventually triggers the markup phase, right? And during the markup phase, prices go higher where, and this is the phase in which the retailers enters here. And because of retailers, the prices move higher, right? And in the distribution phase, the smart money starts selling the positions, right? And that's how the prices they slowly square off their position, right? And that's how this phase triggers the markdown phase. And in the markdown phase, again, the retailers come in and square off their positions, retailers, right? So retailers again enter here, right? The retailers square off the position. That's why the price further goes down. So these are the four stages in which the market normally operates. So we should if we understand these four phases, we will be able to understand the action or the positions taken by the big players, so that we can better make we can make better entries in the market. And so let us take an example here. So let's say this is the chart of SDFC. If you see here during this June to October, you see June to October, the market, the stock was consolidating. The stock was consolidating, right? You see here, the stock was consolidating here. So the big players were buying here, here, right? And eventually the price broke higher here, and then it fueled the markup. This is the markup phase. This is the accumulation phase. Accumulation. And once the price broke, the retailers think that the price is going higher, so they enter here and they further fuel or take the prices higher. So this is called as markup phase. Markup phase, right? And then if you see here further, then again, now you see the market here is in the consolidation stage. You see the prices are starting consolidated, right? So it may be the sign here the smart money is squaring off the position, and it may be possible that market may go down from here, and that may be. So this is the distribution phase. So this was the markup phase. This was the accumulation phase. This is the distribution phase, and maybe it is a starting of the markdown phase, right? Maybe the prices may go down further, right here. So that is how market operates in the four stages. So thanks for watching.